It's certainly been a seesaw of a week for investors. If you look at Monday, that was the worst day of the year. And then yesterday, basically the third best day of the year. So you've had this kind of seesaw back and forth in the marketplace. The biggest challenge is that many of the issues facing investors right now, from the Fed to trade wars to the US dollar to other central banks and all these GDP reports we're getting around the world, a lot of these issues have become intertwined. And so whereas before the question of the Fed versus trade talks were fairly separate, now it's basically affecting one another. So this creates an additional layer of uncertainty for investors who have basically, in aggregate, priced in the fact that the Fed is going to continue easing over the next year.
It felt like on Monday, because when, Monday we had that massive drop, and it seemed like it was sparked by China's currency, and how it fell below 7-1 to the US dollar. Is it China's currency? Is it the Hong Kong protests? Is it our Fed? Is it Brexit? What's driving equities right now?
So on a short-term basis, it does appear to be these headlines. So the China currency devaluation and pegging it past 7, that's something that was unusual, but I think it has to be viewed in the context of these trade talks. This is different from what we saw back in 2015 when China had to devalue their currency because of the economic story and the fear that they would have a deceleration and a hard landing. That is probably not the case today. It's really just about the trade talks and retaliation there. So as long as ultimately we get some sort of trade deal, now obviously that deadline has been pushed well beyond what anyone thought it would be.
There doesn't seem to be any end in sight there.
If
anything, it's heating up, not cooling off.
I guess in the meantime, maybe there's some sort of respite to these increased tariffs. September 1st is around the corner, but obviously those headlines can change on a day-to-day basis. Ultimately, for longer-term investors, we need to have some perspective here. Despite these trade headlines, the U.S. market is still up 17% this year.
Yeah.
We're not that far, like you said earlier, from making new highs. And actually, since the beginning of 2017, we're up over 30%. So it's important to have some perspective.
Yeah, I think you're making a really important point, James, which is context. I know the market tanked on Monday. We've come back this week, but to your point, the Nasdaq up nearly 20% this year. The S&P has done well. We have room, I guess, to wiggle. Do we not? I mean, we have room for earnings estimates to come down, for the markets to even come down, and still have a pretty good year for stocks.
I think that's right. The economy is still fundamentally strong, even if it has decelerated. And I know a lot is made about the Fed and the Fed put and this insurance cut they made. I think the challenge is that this is a party that's gone on for a long time. So if it's slowing down, it's because the guests are tired. It's not because the Fed needs to refill the punch bowl, per se. And the biggest challenge is really the Fed. It's a credibility issue. Do
they need to cut rates in September, James?
Well, the challenge is that the Fed has basically lost control of the yield curve. There's a question of whether they had any control of it over the course of this cycle to begin with. So right now, the market is basically saying, yes, the Fed will cut rates 100% in September. We look at the economic data. Of course, the yield curve is flashing yellow right now, and it's not so
yellow
obvious.
or red?
It's still yellow right now. So, we're about a 10 basis point spread between 10s and 2s. We're still not in inverted yield curve territory yet by that measure.
Yeah.
But, clearly it's flashing a negative signal.
Very, very quickly, our RBI at the end of the show, we asked our viewers, are we going to be in a recession in the next 12 months? We got our answer at the end of the show. What do you say? Yes or no?
We're saying no. We will not have a recession in the next 12 months. The economy is still fundamentally healthy. Obviously, a lot of crazy things can happen between now and then, but we still think it's a good time to be invested.